at the U.S. 10-year yield, which obviously is unbelievably important. And I'm curious to see, Jerome Powell talks on Friday. So there's a speech from Jerome Powell on Friday. I'm curious if the Black Friday strength in sales, does that push him in either direction? If we look at the 10-year yield, I had some key trend lines, right? Trend line from here across, this upsloping trend line. Notice how the 10-year yield fell down and kind of is kissing this area and beginning to kind of move off of it. Now, the question I have is, do we see more of a bear flag where it goes like this and eventually rolls, or does it start to curve up? I would in general think this is the more likely scenario based on how far we've come on interest rates. I still think we probably have to come down a little bit more. Now, the bigger question will be is, does that create a catalyst for pushing the markets up higher? Or does it all of a sudden become a panic scenario where people say, oh my goodness, the economy's starting to fall apart, and do we then see rates going down with the stock market? Remember, historically, number one, it's only when the yield curve uninverts, which by the way hasn't happened, that recessions come, historically speaking. And also looking at the data, we also know that the markets tend to sell off, and this is something a lot of people don't know. The stock market tends to sell off once the Fed starts cutting rates. And the reason you might say, well, I mean, what the heck? Why is it that when the Fed cuts rates, the markets sell off? Don't the markets love free money or low, cheap money? And the answer is this. If the Fed is being pushed to cut rates, we know that there's something majorly wrong in the economy. And there's going to be this fear, just like on the upside, that the Fed was behind the curve. The Fed may be looked at as being behind the curve on cutting. Oh my God, they're not doing enough quickly enough. They're not cutting rates enough to stimulate the economy. They're late. They're kind of, it's that whole inflation is transitory. They call it wrong. And the panic and fear comes in. So just remember those key notes on those two factors there, that the markets actually sell when the Fed starts to cut rates. Everyone's so joyous about rate cuts. If it actually comes to rate cuts, what is that telling us about the economy? Dollar-wise, take a look. I've been bearish on the dollar. I continue to be bearish on the dollar. Yeah, you have some supports here, right? We've broken this key level, so we know that that technical level came down. Notice how it came down here and then did a classic retrace to the scene of the crime and then continued on. If I zoom in a little bit here, real quick, just to show you. So here was the consolidation, the breakdown, the retrace to the scene of the crime, and then the continuation there. And I continue to think the dollar probably heads a little bit lower. Your short-term target is going to remain right at this trend line. This trend line is a major trend line. If I zoom out, I'll show you why it's a major trend line, because look at how far back it goes. And for those of you that are wondering what makes a major or a minor trend line, the answer is pretty simple. It's that, very short-term connections on pivot points on the chart are going to give you more minor technical levels. When you go back on the dollar chart to 2021 and you have this pivot low and you connect it to the secondary most dramatic pivot low, what do you think that's going to do? That's going to create more of a major technical level. So if the dollar does fall into this, you should get some sort of bigger, longer, sustainable bounce versus a shorter term trend line. This you could look at as a shorter term trend line. Look at how far back you only had to go. Basically, you just went to earlier this year, right? Right through here, you even chopped through, then you reestablished. Only minor right there. Same thing with this pivot high right through here, right? Only minor there, therefore it broke a lot quicker. That's golden nuggets, by the way, in terms of education, understanding major versus minor technical trend lines. Follow me over here. We're going to talk about natural gas now. Now, natural gas, guys, this is pretty remarkable. So we've broken through a couple key trend lines. Take a look, right? And interestingly enough, we're already starting to rally back. So if we take our lowest point on natural gas here to our lowest point here, look at this. We were below this morning pre-market in the overnight. We were below pretty impressively, right? If I move out of the way here so you guys can see. But notice how we've already started to rally back and we're basically back to that trend line. The other thing I want to show you is I added another trend line in here, which I thought was really important to kind of see. You might see this new blue trend line here. Take a look at where it comes from. So if we look at this, we can see very clearly that this was a pivot high here. It connects through this middle point of the bull market run. By the way, does that pattern look familiar? Very Bitcoin-esque. And I actually point this out on a very common game plan, you know, kind of we see this pattern a lot. And the reason I do is because a lot of crypto investors are newer investors. And newer investors, they don't understand that patterns tend to repeat over and over again. And so again, that's the Bitcoin pattern. This is a pattern that occurs in so many charts. All right, so again, if we look at this, what do we see about this is that line comes right back down into that level as well. Now, one of the things that I was thinking to myself, and this is what I do, folks, when a level is broken, I say to myself, okay, well, the level, right, and this was this morning before we rallied back to this trend line, right? We're approximately back, and I don't know where it goes by the end of the day. But one of the things I say to myself is, okay, it's below the level I thought it was at. So why does it go there? And I want to show you something that I came across, and I didn't come across this until like an hour ago when I was kind of doing a little research before the game plan. It just shows you how this is all fluid. So what I want us to do is I want us to take a Fibonacci retrace from the lowest point down here to our highest point here. And let's see where that fib ends up going, right? So if we take our Fibonacci retrace, right, from the lowest point, and let me move out of the way so you guys can see this, the lowest point, and I know I have a lot of lines here, so I'll explain it, but essentially taking this low to this high and seeing what Fibonacci retrace, the low today on natural gas right here is exactly at the Fibonacci 50% retrace. Perfect, literally to the penny. 50%. So price from this low to this high has now, per the low today, done an exact 50% Fibonacci retrace. I think that's very, very cool. And notice how price is now starting to bounce back up off of that technical level. And again, very cool stuff there.